All right, listen to me. When we talk about the titans, the real heavyweights of Wall Street, you gotta talk about Edward Ned Johnson III. This isn't some flash-in-the-pan hedge fund hotshot who made $1 billion on one lucky trade and then blew up his fund. No, 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 this is about building an empire, brick by boring brick. The man took a respectable Boston firm and turned it into a financial Death Star, a money-making machine called Fidelity Investments. We're going on a journey, a timeline from his first job to the peak of his power. This isn't just a history lesson, people. This is a masterclass. We're going to break down his career moves. We're going to break down the gutsy business plays he made. We're going to break down how the money piled up. And I mean piled up. We're talking about the kind of wealth that makes your head spin. Let's get one thing straight. Ned Johnson wasn't born in a log cabin. He came from money. His father, Edward C. Johnson II, founded Fidelity Management and Research (FMR) back in 1946. So yes, he had a head start. But here's the thing about inherited wealth. You can either grow it or you can blow it. And 90% of the time, the kids blow it. They don't have the hunger, they don't have the drive, they don't have the fire in the belly. Ned Johnson was the exception. He grew up in the Boston Brahmin world, surrounded by finance talk at the dinner table. He didn't just absorb it, he was fascinated by it. He went to Harvard. After a stint in the army, he didn't just waltz into his dad's office and demand a corner suite. No, he started at the bottom. In 1957, he joined Fidelity as a research analyst. A stock picker. He was grinding it out, poring over balance sheets, kicking the tires on companies, trying to find the next big winner. He had to prove he had the chops. This period was crucial. It was his training ground. He learned the engine room of the ship before he ever set foot on the bridge. After proving he could pick stocks with the best of them, Ned Johnson started his climb. And it wasn't a slow, cautious ascent. It was a methodical takeover of responsibility. He became president of the company in 1972, chairman in 1977, CEO, taking the reins from his father. This is where the story gets really interesting. The old man had built a solid, respectable mutual fund company. But Ned saw something bigger. He saw technology. He saw consumer demand. And he imagined them colliding at the epicenter. This wasn't just about managing funds anymore. It was about expansion. It was about diversification. It was about taking risks the old guard would have balked at. One of his first game-changing moves was embracing the money market fund. High inflation, regulated bank interest rates. Fidelity's money market funds offered everyday people a way to get a decent return on their cash. With check-writing privileges, this was revolutionary. It pulled billions from traditional banks and funneled them into Fidelity, a direct assault on the old way of doing things. He didn't stop there. He saw the coming 401k revolution, driven by changes in tax law, as a massive opportunity. While other firms were slow to react, Johnson went all in. Building massive infrastructure to manage corporate retirement plans. He turned Fidelity into the go-to administrator for workplace savings, making the company indispensable to millions. He was connecting the dots. The future wasn't just selling a fund. It was owning the entire customer relationship, cradle to grave. Use technology, smart marketing. Go directly to the consumer. He bypassed old-school brokers. Opened walk-in investor centers, started a massive telephone service center, building a retail machine, a direct-to-consumer behemoth nobody saw coming. Each step a calculated risk that expanded the company's moat. He wasn't just playing the game, he was changing the rules. Now we get to the real fireworks. Once Ned Johnson had the CEO chair, he put the pedal to the metal. His vision was simple but radical. Make Fidelity a financial supermarket. Buy stocks, invest in mutual funds, manage your retirement account, get a credit card, all under one roof. He understood the power of convenience and brand loyalty. Get you in the door with one product, like a money market fund. Then sell you 10 more over your lifetime. It's a brilliant strategy, and he executed it with military precision. He poured money into technology like it was going out of style. Remember the 70s and 80s, other firms using paper ledgers, other firms using carrier pigeons, Johnson investing in massive mainframe computers, Johnson installing sophisticated telephone systems, process transactions faster, answer customer questions quicker, provide information more efficiently. That firm would win. Tech obsession allowed Fidelity to scale up fast. It was the secret weapon for his consumer strategy. Then came the masterstroke, the discount brokerage business. 1978 launched Fidelity Brokerage Services, a way for individuals to buy and sell stocks at a fraction of the cost of big Wall Street firms, a declaration of war on Merrill Lynch, on Smith Barney, on the whole white shoe establishment. You don't need a fancy broker in a pinstripe suit to manage your money. You can do it yourself. We'll give you the tools cheap. This move democratized stock ownership for millions and created a massive new revenue stream for Fidelity. Star fund managers. Johnson knew that performance talks. He created a culture that celebrated superstar stock pickers, most famously Peter Lynch of the Magellan Fund. He gave them autonomy and rewarded them handsomely for beating the market. Managers delivered incredible returns, which attracted billions in new assets, which generated massive fees for Fidelity, which allowed Johnson to invest more in technology and marketing. It was a self-perpetuating money machine. Ned Johnson was the master engineer keeping it all running. Let's talk numbers, because at the end of the day, that's the scorecard. When Ned Johnson took over as CEO in 1977, Fidelity had about $3.9 billion in assets under management. A respectable number for the time, but nothing to write home about. Now, get ready for this. By the time he stepped down as CEO in 2014, that number had exploded. We're not talking about a double or a triple. We're talking about a stratospheric, mind-bending leap to over $5 trillion in customer assets. That's trillion with a T. It's a number so big it's hard to even comprehend. This insane growth in assets directly translated into a personal fortune that put him in the pantheon of the world's richest people. The Johnson family owns a huge chunk of the privately held Fidelity, around 49%. Think about that. They control nearly half of a company that generates billions upon billions in revenue every single year from management fees. At his peak, Ned Johnson's personal net worth was estimated to be north of $10 billion. But the family's total wealth, tied up in the company they built, is many times that. We are talking about generational wealth on a scale that few families in history have ever achieved. But it's not just about the size of the number, it's about the quality of the growth. This wasn't a one-hit wonder. This was steady, relentless expansion over 4 decades. He navigated market crashes in 1987, the dot-com bust in 2000, and the financial crisis in 2008. While other firms were imploding or getting bailed out, Fidelity stood strong because its business was diversified. It wasn't just a mutual fund company anymore. It was a brokerage, a retirement plan administrator, a technology company. That diversification, that financial supermarket model, made it incredibly resilient. All right, class is in session. You want the secrets? You want the playbook that made Ned Johnson a king? It's not about complex derivatives or secret algorithms. It's about fundamental, common-sense principles that he applied with ruthless consistency. First and foremost, be a long-term thinker in a short-term world. While everyone else was chasing the hot dot-com stock or panicking during a crash, Johnson was playing chess. He was always thinking 5 years, 10 years, 20 years down the road. He invested in technology, infrastructure that wouldn't pay off for years, because he knew that building a real empire takes time. Lesson number 2. The customer is king, queen, the whole royal court. Johnson's entire strategy was built on giving the retail investor a better deal. Cheaper trades, more investment options, easier access to information, better service. He understood that if you solve your customers' problems and treat them right, the money will follow. He wasn't obsessed with quarterly earnings, he was obsessed with customer satisfaction. This focus on service built a level of trust and loyalty that became Fidelity's most powerful competitive advantage. It's a lesson every business owner and investor needs to tattoo on their brain. Third, don't be afraid to cannibalize yourself. What does that mean? It means don't be afraid to launch a new product or service that might compete with your existing business. When Johnson launched the discount brokerage, it threatened the fat fees that mutual funds traditionally relied on. He did it anyway. He knew that if he didn't disrupt his own business, someone else would. He chose to lead the change rather than become a victim of it. You have to be willing to tear down the old to build the new. That takes guts. That takes vision. Finally, empower your best people and get out of their way. Johnson was famous for creating a meritocracy. He hired smart, ambitious people, gave them incredible autonomy, and rewarded them for performance. The story of him giving Peter Lynch the freedom to run the Magellan Fund his way is legendary. He knew he couldn't make every decision himself. His job was to create an environment where talented people could thrive and do their best work. Find the superstars. Give them the resources they need. Let them run. That's how you scale genius. So what's the takeaway? You've heard the story, you've seen the numbers, you've learned the lessons. Now it's time for action. Let's boil it all down into 3 simple, powerful plays you can make today. This is how you move the needle from spectator to player. Ned Johnson's legacy. Steady innovation. Customer focus. Long-term vision. First, automate your savings. Right now. Johnson built an empire by making it easy for millions to save for retirement through 401ks. The secret sauce was automation. Money comes out of your paycheck before you can touch it. Set up an automatic transfer from your checking to your brokerage or retirement account every payday. Even if it's just $50, start the machine. The power of compounding over the long term is the most powerful force in finance. Make time your greatest ally. Start early, be consistent, and never, ever stop. Second, become a student of the game. Johnson didn't inherit the CEO job. He started as an analyst and learned the business inside out. You need to do the same with your finances. Read a book. Listen to a podcast. Learn the difference. A stock. Learn the difference. A bond. Learn the difference. A Roth IRA. Learn the difference. A traditional IRA. You don't need to be an expert. Know the fundamentals. Knowledge is power. It protects you from bad advice. Stop outsourcing your brain and start learning. Finally, think like a disruptor. Johnson's greatest wins came from challenging the status quo. He saw an industry that was expensive. He saw an industry that was exclusive. He saw an industry that was inefficient. Look at your own life. Look at your own career. Look at your own portfolio. What is the old way of doing things? Is there a cheaper way? Is there a faster way? Is there a smarter way? Cut out high-fee investment products. Use technology to streamline your budget. Always be looking for an edge. Don't just accept the way things are. Challenge everything. That is the spirit of Ned Johnson. That is how you build an empire. Now go make some money. Booyah.